All right. Welcome back to another episode of the Black Bullion Show. Why invest in gold, you ask? Well, Jim Rickards has an answer. But first, if you're new to this channel, please hit that big, red, juicy subscribe button right down below. Also, please hit the thumbs up, that like button. It helps the YouTube algorithm spread this economic evangelism right on out there, right outside that window to the masses, bringing more people into the precious metals. Okay, now when you bring up gold to your friends and your family, what do they say? Now, I know you guys are rattling off all the thoughts and all the things that have been said to you over the years. Are their answers filled with confusion, to say the least? Do they speak to you like you wear a tinfoil hat on your head? We know what I say when people approach me with confusion about precious metals. I don't blame them. Why? Well, it's because the education system in the United States leaves a lot to be desired, especially when it comes to history, and even more so when it comes to money. Now, Jim Rickards is also sympathetic to this. And, here is one of the reasons why he is. And I quote, I was a graduate student in international economics in 1973 to 1974. Many observers believe that the gold standard ended on August 15th, 1971, when President Nixon suspended the redemption of dollars for gold by foreign trading partners. That's not exactly what happened. Nixon's announcement was a big deal, but he intended the suspension to be temporary. And he said, so in the announcement, the idea was to call a kind of timeout on redemptions, hold a new international monetary conference similar to Bretton Woods in 1944, devalue the dollar against gold and other currencies such as the German Deutschmark and Japanese yen, and then return to the gold standard at the new exchange rates. I was able to confirm this plan with two of Nixon's advisors who were with him at Camp David in 1971 when he made the announcement. I spoke to Kenneth Dam, an executive branch lawyer, and Paul Volcker, at the time the Deputy Secretary of the Treasury. They both confirmed that the suspension of gold redemptions was meant to be temporary, and the goal was to return to gold at new prices. Some of what Nixon wanted did happen, and some did not. The international conference took place in Washington, D.C. in December 1971 and resulted in the Smithsonian Agreement. The dollar was devalued from $35 per ounce to $38 per ounce. It was later devalued again to $42.22 per ounce. And the dollar was devalued against the major currencies of Germany, Japan, the UK, France, and Italy. Yet, the return to a gold standard never happened. This was a chaotic time in the history of international monetary policy. Germany and Japan moved to floating exchange rates under the misguided influence of Milton Friedman, who did not really understand the role of currencies in the international trade and direct foreign investment. France dug in her heels and insisted on a return to a true gold standard. Also, Nixon got up in his 1972 re-election campaign to be followed closely by the Watergate scandal. So he lost focus on gold. In the end, the devaluation was on the books, but official gold convertibility never returned. All of this monetary wrangling took a few years to play out. It was not until 1974 that the IMF officially declared that gold was not a monetary asset. Although the IMF carried thousands of gold on its books in the 1970s and still has 2,814 tons of gold, the third largest holding in the world after the US and Germany. The result was that my class of 1974 was the last class to be taught gold as a monetary asset. If you took economics after that, gold had been consigned to the history books. No one taught it, and no one learned it. Gold was still a commodity, quote unquote, and something that was taught in mining colleges, but not in economics. No wonder most people today don't understand gold. Wow. Though this is the case, Jim points to self-education, and I am a big proponent of self-education as being an option. He then sees three likely scenarios that could push gold over $2,000. The first one is loss of confidence in the US dollar. The second one is the continuation of our current bull market in gold. Now, I know some people have disputed that this is the third bull market, which is what Jim says. Others actually say that we're in a second bull market and that the first one ended was from 1971 to 1980, and that our current one began in 2001 and is still going on right now. It's just longer. And panic buying is the third one, from either a second wave of the issue that we have going on right now, COMEX redemption failures, or even a Joe Biden victory. Now, remember, I made a video about that, about, gold going up if Joe Biden wins. You can check that out in a previous video. But Jim Rickards also says that could also bring gold above or send gold higher. He says any of these on their own would be enough to drive gold higher. Again, this is why I chose to buy another ounce of gold on Friday, 2 days ago, when others got nervous. The fundamentals are solid in gold. Its behavior on Friday is consistent with those fundamentals. When people are risk on, gold drops. That's the fundamentals. And it wasn't even a large drop, just below the 1700 support level. And some people think the support level is even lower than that. So it's still in a safe range, but what do you guys think? Let me know in the comment section below. What do you think about the three ways Jim Rickards thinks gold will rise? Thanks again for watching. Please subscribe down below. Also, please give the video a like, and thanks. It's Black Bullion.